This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just come online.
I'm Haidi Stroud-Watts. The top stories this hour. The US presidential candidates holding their final campaign events ahead of tomorrow's knife-edged election, looking to secure an advantage in the crucial swing states.
Traders shunning risk ahead of election day. This week's Fed call also in focus, with treasuries rising across the curve.
And it is decision day for the RBA, with rates set to stay at that 13-year high as the central bank grapples with slow disinflation.
Okay, let's get straight to some breaking news out of South Korea. It is CPI numbers for the month of October, coming in a bit weaker than expected. On-month CPI flat in October. On-year CPI accelerating just 1.3%. The expectation was for acceleration of 1.4%. Seeing a big decline in transport costs, a contraction there of 4% on-year. Food prices rising 1.4%, and core CPI rising 1.8% on year, so that's a big slowdown as well. Of course, we did have the Bank of Korea cut its base rate by 25 basis points last month to 3.5% as inflation stabilizes. That trend looks to be continuing, according to these latest CPI numbers. CPI gaining just 1.3% on year. That is the slowest since January 2021. All right, so we've just opened for trade here in Australia as well. So we've got the ASX kind of flat at the moment with that staggered open. We did see some pretty decent gains on Monday, up 0.5%. The big event today, of course, it is RBA decision today, but we are expecting no change. It's exactly a year now since the RBA last move. We're going to be on hold at 4.35%. The Aussie dollar's been grinding lower over the past month. We do have Japan coming back from a public holiday. Nikkei futures pointing a little bit to the upside there. We might see some catch up after broad-based gains across Asia on Monday. Tokyo Stock Exchange is going to lengthen its trading day today as well by 30 minutes. That starts today. The close is now going to be at 3:30 in the afternoon, Heidi.
Yeah, that catch-up play you talk about could very well happen when it comes to US stocks, right? The path sort of ahead, looking like we could see that gain into the year, and that's still looking like a pretty positive outlook, despite, of course, really voters as well as investors just treading water. We're not seeing a lot in the way of fresh directions at this point, but S&P futures looking just modestly higher after a session where we saw really stocks failing to gain traction, bonds climbing there as well, but yields declining as along with the weakness that we saw in the dollar as well, really paring back of these bets that Donald Trump could more convincingly prevail in the election results. We're seeing quite a bit of uncertainty there. Taking a look at oil, we're seeing crude prices a little bit of a gain there as OPEC Plus delaying that upward hike, pushing through until December, and the election risk as well as Middle East risk continuing to roil that trading action there. Well, Donald Trump and Kamala Harris are sweeping across the swing state of Pennsylvania on the final day of campaigning for a presidential election that is on track to be one of the closest ever. From all, let's bring our political news director, Jody Schneider. And Jody, we're on that sort of final stretch, right on the eve of one of the most closely watched US election campaigns in history. So many twists and turns, including, of course, the Democratic nominee and candidate coming in really right at the end. It's still looking like a photo finish.
Yeah, that's right. After all of this and all these polls that kind of showed one of them or the other one up, most polls are within the margin of error right now, Heidi. So it means that either candidate could take this race. And particularly, it comes down to those 7 swing states because they need to get 270 electoral college votes. They each start with a good number in their chart, in their tally for what they tend to take as states. So it comes down to those 7 swing states that are essentially too close to call, all of them. We've seen some recent polls that show that Kamala Harris is doing better, particularly in states like Wisconsin and Nevada. But again, it's all within the margin of error. It could go either way. And I think that's what has the markets being somewhat volatile. And that's what has a lot of people, supporters for both camps, pretty anxious.
So what was on the agenda for all the candidates today as they made those final arguments?
Yeah, Pennsylvania really figured heavily in both of those, both their agendas, Paul. That's a state that really has been too close to call. Joe Biden won it in 2020. Hillary Clinton didn't win it in 2016, and it could make a huge difference. It could all come down to Pennsylvania. So they were both spending time there. Harris started in Scranton, Pennsylvania, where Joe Biden is from, and she's going to end the day with rallies, including some star power with Katy Perry at one and Lady Gaga at another in Pittsburgh and then in Philadelphia. Donald Trump went through the state today. He will end up in Michigan, in Grand Rapids, Michigan, where he has ended both his other campaigns in 2016 and 2020, sort of a sentimental favorite, if you will. He hopes it brings him good luck.
Is there an idea of when we'll actually get to know a definitive outcome, right, both in terms of the presidential race and what the majorities look like in the House and Senate?
Yeah, and that's really anybody's guess. That's the other big question. Not only who wins, but when will we know? There's some people we interviewed today, some political analysts who say it could be a relatively early night, but everything kind of points to it being more complicated than that, especially because there has been so much talk of legal challenges. And Donald Trump, yet again today, made the case that if he loses the election, it may have been stolen. And he's saying that even before election day itself. So we're not sure about how the presidential, will go in terms of the counting. Also, the House and the Senate. The Senate we may know relatively early. We may know tomorrow night. But the House really will be complicated because a lot of seats that are up for grabs are in California. 5 seats that could determine the outcome of who controls the House of Representatives are California seats. So we expect that to go pretty late as well. And almost historically, we could see both chambers flip majority control, the House to the Democrats and the Senate to the Republicans. So there's a lot of things to look for as these election results come in.
All right, Bloomberg's political news director Jody Schneider there. Risks around the US election are part of the picture for Australia's Reserve Bank, widely expected to keep rates on hold today. Again, that'll mark a year of unchanged policy as officials grapple with a slow pace of disinflation. So let's bring in our economy reporter, Swati Pandey. So, Swati, the RBA really looks like it's going to remain an outlier here.
That's right. We have seen developed world central banks, Washington and US, New Zealand, Bank of England, they are all cutting rates. So RBA is not yet prepared. It's also, apart from the slow pace of disinflation, in their last statement, they also pointed out that geopolitical uncertainties are more pronounced. That's exact same words they used. And they have been talking about increase in oil prices. If Trump actually gets into office, what happens to relationship with China, which is Australia's biggest trading partner. China's slowdown is a big part of that story as well. So a lot of uncertainty, and that really calls for patience from the RBA today.
What are we likely to expect when it comes to the tone of the statement?
Economists are broadly expecting the tone to remain unchanged, although we had the inflation data last week, which came in broadly in line with expectations. So we did see headline inflation come into the band at 2.8%. The RBA has said that it will ignore the move in headline inflation because it's largely driven by government rebates. But core inflation came off its high numbers as well. So it's at 3.5% now, and RBA's target is 2 to 3%. So it's really close to the target. So there is quite the probability that the RBA does shift more neutral than it has been so far. They are also releasing fresh forecasts for inflation, GDP, and employment, and that will give us a better idea around what their stance will be.
What sort of signals and data points are we watching for in terms of when that first rate cut could come? Is it about household spending? Is it about the sort of weaker growth outlook if we see that?
Look, the biggest thing obviously is inflation. So far the forecast that the RBA has released, that we don't see inflation returning to the midpoint of the target, which is where they want it. So whether in today's forecast we see that midpoint, that is going to be critical. And the labor market has proven to be extremely strong. It has beaten their forecasts. Unemployment is at 4.1%, which is really low. So if those forecasts remain, like if we see inflation remaining sticky in their forecast, if we see employment growth remaining strong, unemployment remaining low, then rate cut is really down the line, maybe middle of 2025 as markets are pricing currently.
Bloomberg's economy reporter on RBA Day with us, Swati Pandey there.
I just got some breaking news for you out of Apple. Apple apparently exploring a push into smart glasses. This is a project codenamed Atlas. The study apparently aims to understand what people like about existing products in terms of smart glasses, and it's going to keep Apple developing its own smart glasses. Apparently, staff members have been encouraged to become familiar with smart glasses. They're looking to gather feedback from other products on the market, including the one that has been experimented with by Meta, the Ray-Ban device. So this could be a potential challenger for that. Although an actual product likely to be years away, and a representative for Apple declined to comment. So Bloomberg News, though, reporting that Apple is considering a push into smart glasses territory with this product codenamed Atlas. Haidi.
Coming up on the Asia Trade, why Pepperstone Group sees opportunities in crypto ahead of the US election. The former CEO of the Democratic National Committee and current executive director of the Science Institute tells us how reliable polls are in this year's election. Plus, the United States Study Centre will be along with us to discuss the future of the AUKUS alliance in the face of a possible return of Donald Trump in the White House. This is Bloomberg. Take a look at what we're seeing when it comes to just the first 15 minutes or so of trade here in Australia. The ASX 200 off about 0.25%. We are looking like muted volumes today, of course. It is also the Melbourne Cup race day, so we do tend to see a pretty quiet trading day at this point, with Melbourne closed for business mostly. We are seeing Chicago Nikkei futures indicated to see a little bit of upside. We had the public holiday closure yesterday, and S&P futures just modestly positive after a session where we did not see a whole lot of risk-taking. In fact, really just treading water when it comes to the equity session. Really, investors being loath to take any fresh positions in such a tight election race. Our next guest thinks that the dollar, possibly crypto, are the cleanest trades around the US election. Chris Weston is a head of research at Pepperstone Group and joins us now. And Chris, at least when it comes to crypto, is that reliant on having a Trump victory? Because that has been one of the sort of most popular Trump trades.
Well, I think so. I think that the idea of having one of the most important people in the world back in your corner and making it the home of crypto is obviously a very strong situation. But then I guess you've got the second tailwind, which is similar to the gold thematic, which is why gold's been at all-time high of obviously concerns about debasement and fiscal recklessness. Should we get a red wave coming through, and then you've got gold and perhaps crypto seen as a bit of a hedge against that trade. So you have seen them, obviously recently working concurrently with a stronger dollar, with stronger real rates, and I think that's down to the fiscal issue that we've been seeing. So, I think with the Trump situation, what we've seen, if you regress the moves recently, is you get the double kicker by having Trump back in your corner, but secondly, obviously you've got that hedge against potential ballooning deficits coming through as well. But I think, for me, I'm most focused on the US dollar. I think that obviously it's quite a binary outcome. The market goes into the election modestly long of US dollars, but obviously if we get a Harris win, and obviously that comes with a split Congress, we're looking to sell US dollars. I think Aussie dollars a good long against that situation. Dollar yen's going to go down. Obviously, the tariff risk comes out of the market. Conversely, if we get a Trump win, you'd probably see a little bit of a pop in the US dollar, 1-2% or so over a day or two. And then it really comes down to what happens with the house call. And that's where we really can see some strong moves coming through in the US dollar. So it is pretty binary. I think, if you look at the equity move, you can make a case for upside. You can make a case for downside in both camps. But I think, the US dollar is probably the cleanest expression or the most obvious expression for this week.
Most views on Wall Street suggest that, once there is sort of a clean-ish result from the election, we're just going to see the resumption of the S&P's rally, right? Both on post-election relief, but also that return of the fear of missing out trade into the year end. Does next year look a little less certain?
Yeah, I'm probably more on the short-term camp, so I'm not really sort of focused on strategizing for 2025. But I think if we take what we've got in the immediate term going into year end, I think the negative case for equities is if we were to see a red wave coming through, obviously we can make a call that deregulation being having a clearer passage through Congress would be very, very positive for risk for equity. Obviously the tax cuts, you probably see them make some way through Congress. Tariffs is a bit of an issue, but generally speaking, you can make a pretty bullish case for certain parts of the equity market to rally into year end on the back of that. And I think the sort of the negative camp is that if we were to see term premium moving up, and we did see a backup in duration, a substantial spike in the long end. Equity markets might not like that situation as well. So again, it really comes down to what the market sees. As I say, I mean, it's pretty clear cut in the US dollar. But when we're looking at the equity market, the market will see what it wants to see. My base case is that a red wave would be positive for equities, and then we go into the Nvidia results in later this month, and then we potentially set ourselves up for a nice chase into year end, as active managers obviously have to outperform, and we've obviously seen some stellar returns for the S&P for a benchmark this year. So look, I mean, it's a lot of hypotheticals. For me, the price is the price, and the collective wisdom in the market will tell me where it wants to go and how it sees the situation, and I'd be more inclined to react when we see how the market sort of gives the stamp of approval. Whereas I say FX is pretty clear. I'm preferring from this election really from an equity perspective, from an index futures perspective, just to see how the market sees this, because I don't think the first move is going to be the last move. I think it could set off a bit of a short-term trend, which I think could be tradable as well.
Haidi mentioned there a clean-ish result, which I think speaks to another very real risk here, is that this result ends up being contested. It's not hard to imagine a scenario where we have protracted legal battles, policy inertia, all against a backdrop of intense social tension. What then for markets, and how would you respond?
Well, I mean, I think we've had to get a contested election. I think, obviously the market will price in an outcome and obviously then review the situation of whether that could be overturned. And obviously the problem with this sort of situation is we're not really that well versed in the legalities of this. And so pricing risk, pricing certainty and potential change from the contested situation is something that a lot of market participants will find quite a challenge. And when you get a distribution in potential outcomes, that's when we get further volatility playing through. But I think, whether we say that or not, I suspect there probably wouldn't be a great chance that it gets changed. But I think probably for me, if we're looking for this week, we're talking about this clean outcome. For me, when I'm talking about the US dollar, for example, is that, let's say we were to get a Trump. I mean, I think if the Harris win comes through, I mean, it's pretty clear cut. She's going to get a split Congress and, you just go and sell the dollar against the yen and Australian dollar and various factors. Obviously, if the Trump comes through, then we get a little bit of a pop in the US dollar. But then we look at the Fed meeting. And if we don't know the House outcome, I think the interesting situation from the Fed meeting, of course, is that, if the Fed were considered to be dovish, Powell was considered to be dovish relative to market pricing, then, do you really want to go and sell US dollars with the threat of the House outcome still to come? And that might not be known for a week, maybe even longer. So that just makes the Fed meeting, unless we've got the House outcome, very difficult to trade as well. So it could be a very messy week.
Chris, before we let you go, let's move on to some firmer ground. The RBA, I think we're pretty confident what's going to happen there today. No change expected. That'll be a year now. But when you see that changing, we've got a chart on the Bloomberg that shows the Aussie dollar, although it's been slipping recently, traders are net long here. I guess the question, though, is how long?
I think trying to pick the timing of the RBA meeting, RBA first cut is something that's been moving around. It's a very flexible moving target. People talk February, moving out to, we've got the first cut now being fully priced, and a bit more in May. So I think there's just a lack of confidence in trying to price that. And to be fair, when you're trading the Australian dollar, and you're probably looking at other factors, it's a very tactical play this week. We get a Harris win, and trying to come out with a decent stimulus of 10 trillion yuan, which has been hosed down a little bit. You could see a really strong rally throughout this week in the Aussie dollar. And 1 week implied vols in Aussie dollar at the moment are trading around 17%, the highest level since around 2020. So people are expecting some big movement. It's not going to come from the RBA meeting today. That there could be some subtle tweaks in the statement, but it's not really going to cause much. It comes down to election, obviously, and then it comes down to what China do in response, and how they look to curb any kind of weakness in the yuan. So the Aussie dollar could have some big moves over the next week. The market's pricing that, but it's not going to come from the RBA.
Chris, always great to chat. Chris Weston, Head of Research at Pepperstone Group. Subscribers can watch us live and catch up on past interviews using our interactive TV function. That's at TV Go. You can also dive into any of the securities or the Bloomberg functions we talk about. Become part of the conversation as well. You can send us those instant messages. Do check it out. It is at TV Go. We'd also like to hear from all our viewers, so we've put together a short online survey. You can scan the QR code that's on your screen right now. You can tell us what you'd like to see more of on Bloomberg Television. Any other suggestions for improvement? More ahead on the Asia Trade. This is Bloomberg.
Morgan Stanley's chief U.S. equity strategist says the U.S. election could present a market-clearing opportunity. Mike Wilson told us what he sees as the top concerns for traders ahead of the landmark vote.
The general trend in labor is down. We're in a late cycle economy. So the equity market is worried about growth slowing, and that's why the Fed's cutting interest rates. Okay. So the bond market can't, the market goes up because growth is better and people believe that, then it could be okay for equities. If bond market yields go up because term premium is widening, because of fiscal sustainability issues, then it's a problem.
Well, I guess the reason why I ask this is because the Trump trade the knee-jerk reaction supposedly is bond yields go up and equities rip, particularly in the more cyclical sectors. I'm thinking of financials. Based on the idea that you're not necessarily getting some sort of economic impulse that's immediately overlaid onto this scenario, why should risk assets continue to rally if yields continue to surge simply on this idea that the deficit's increasing and that bond vigilantes suddenly could be back?
Well, first of all, the financials is a little bit different because that's a dereg sort of call, and I do think that one's fairly visible. I think if you have a Trump presidency and maybe even a red sweep, you could get more lenient regulatory environment, maybe M&A picks up. That's kind of the financials trade, but that's unique. And we don't think the financials have really rallied that much on that trade yet. It's been more about the third quarter earnings season and the fact that we went into that earnings season with not a lot of high expectations. So I think there's scope for further follow through in certain quote unquote Trump trades. At the same time, there's probably the other side, which is that I think a lot of the negative trades have played out for the Trump trades. Bonds have sold off probably too much. And the renewables and things like consumer goods companies that will be hurt by tariffs have really been hammered. So if Harris wins, you could see a pretty big rebound in some markets. So there's a lot of permutations here. It's not as clear cut. I think you said it exactly right. It's all about the setup. Okay, stocks and asset prices move based on positioning as much as they do about the actual news. I'm looking for a clearing event. Okay, I'm hoping this is a clearing event, and then we can kind of get back to doing what we get paid to do, which is analyze interest rates, earnings growth, and kind of multiples, trying to figure out, okay, what's the fundamental case here? And my guess is that could take maybe a month to kind of clear.
Take a look at what we're watching when it comes to currencies. Of course, we've seen that yuan volatility as a top story, but take a look at the yen at the moment, trading at that 152.21 level. There's so much caution, but of course, the decline that we continue to see in the dollar is really driving a lot of these Asian currency trades. Again, dropping against all of its major peers in the overnight session. We also saw that sharp decline in treasury yields as well. Traders really seeming to pare back on these pretty strong bets previously that Donald Trump will prevail in returning to the White House. So we continue to see that greenback volatility. The yen as well as the Swiss franc were among the best performers that we saw in that G10 cohort there. We're seeing euro dollar also in focus there. The euro potentially looking like a pretty binary move depending on the outcome of the election. Well, China's top legislative body has been reviewing a proposal to ease the financial burden on local governments as investors watch this week's meeting for signs of new stimulus. For more, let's bring our China correspondent Min Lo, who joins us out of Hong Kong. So we know that the debt burden for local governments has been an ongoing concern over many years. So was this move widely expected?
Yes, it was in some ways foreshadowed by the Finance Minister Lan Fo-an, who said that the government is planning to take some of the strongest measures yet in recent years to tackle local government debt. And Bloomberg has previously reported that the government is mulling perhaps 6 trillion yuan in additional special local government bond issuance over 3 years. And so last night, after the first day of that NPC Standing Committee meeting, Chinese state media Xinhua had released a readout saying that policymakers are considering raising the debt ceiling of local governments. Of course, we don't have the details yet. We may have to wait until end of the week for that. But this might disappoint some investors who were hoping that we could get more borrowing from the central government rather than the local governments. But still, it is a move that will alleviate some of the debt servicing burden of these local governments at a time when, as you can see on the screen, those government spending this year has been lagging behind, down 1% year to date so far, year on year, when it should be up 3% this year. And so the other thing that we're looking out for that is missing from the readout last night is any sort of new consumption stimulus. So we'll have to see whether we get more details on Friday or whether at best we could get just more forward guidance on what the government could do maybe in the next few years, but perhaps not so much imminent measures in the coming couple of months.
China's also filed complaints to the WTO over the EU's final tariffs on Chinese EVs. So how's this going to affect tariff negotiations and trade relations?
Yeah, and it's interesting that China is now filing this complaint to the WTO just days after those tariffs had been put in place, and also just after European officials had agreed to send officials to Beijing for this ongoing negotiation, both sides looking for other sort of resolution, perhaps a complex sort of price and volume control mechanism, but clearly that is not yielding any breakthrough as of now. The Chinese Commerce Minister had released a statement calling on the EU to correct its mistake and its illegal practices, saying that these tariffs really doesn't have any legal or factual basis behind them. This move potentially raises the risk of escalating this tariff conflict, if you will, into a broader trade conflict between the two sides. Trade between the two sides are amounting to about $800 billion annually. And we know the European Commission has also said that they want to discuss quite a number of issues with China, including its overcapacity in critical sectors, as well as access of European firms into China's procurement market.
All right, Bloomberg's China correspondent Min Lo there. Let's take a quick look at how markets are tracking here in Australia. Not well is the short answer. We're seeing a little bit of risk-off sentiment. We're down about 1/3 of 1%, but every single sector on the ASX at the moment in the red. We've just had Nikkei futures turn negative as well. Safe to say, a bit of volatility and nervousness about as we close in on the final hours now of the US election campaign. Just another quick note on Japan. We've got the Tokyo Stock Exchange lengthening the trading day today by 30 minutes. The close now going to be at 3:30 p.m. Haidi.
Let's get the latest headlines that we're following when it comes to the corporate front. Palantir shares soared in late trade after it posted record profit and quarterly revenue that beat analyst estimates. The company also raised its forecast for the current period. CEO Alex Karp told shareholders in a letter that Palantir is meeting unwavering demand for what he calls a US-driven AI revolution that's reshaping industries and economies. Sources say OpenAI is having discussions with Californian regulators on advancing its bid to transform into a for-profit business. We're told the $157 billion company is in early talks with the Attorney General's office about the process. That's likely to involve scrutiny of how OpenAI values a portfolio of highly lucrative intellectual property, such as its ChatGPT app.
Well, Bloomberg has learned that Apple is exploring a push into smart glasses with an internal study codenamed Atlas. Now, it sets the stage for a showdown with Meta and what the tech giants hope could be the next big device category. Technology reporter Mark Gurman just broke this news and joins us now. Mark, tell us what more details you have.
Thank you for having me. A sure clear sign that Apple's preparing to go after Meta and Snap and smart glasses is a new internal study where they're bringing employees together to evaluate smart glasses that are currently on the market. Now, before Apple enters a new product category, it often does this. It creates these employee studies, does them internally as a way to not let these types of initiatives leak out publicly, right? Obviously, we found out about this one. And this is indicative of the company being at an early stage of exploration on this topic, but I believe they are pretty focused on trying to go after the smart glasses for Meta, both versions with augmented reality and without augmented reality, to really try to make a dent in the head-worn device space.
So I'm curious as to who this appeals to, right? Because as you said, Meta kind of did the stripped-down version. They're not really a true sort of AR set of glasses, right? So does this aim to bridge the gap for people that think that the Vision Pro is too expensive and too cumbersome to use day-to-day?
I think so. I think that they see this as potentially an accessory as a higher-end version of AirPods. I see this as an accessory that is a lower-end version of the Vision Pro. This is something that, if adopted and worked with over time and added to and have an ecosystem built around it, this could be something that evolves into an iPhone replacement. I think that's at least a decade away. But I think the head-worn category is extraordinarily promising.
Is this more of a side quest, Mark, do you think, or is this something that could kind of really build into the broader outlook, given so many of Apple's struggles in recent months and years?
You know, I think everything that Apple does at this point is going to be a side quest, right? There's nothing that's going to replace the momentum, the revenue that things like the iPhone has. At this point, if you're an Apple investor, your best hope is that they can continue to collect these $5 to $10 billion a quarter businesses, the Mac, the iPad, wearables, right, and keep creating these $5 to $10 billion a quarter businesses and create a bunch of them, right? And over time, maybe you have 5 new ones over the next, 2 decades that could evolve into a revenue driver the size of the iPhone. But there's never going to be another single category that produces as much revenue and excitement as the phone.
Bloomberg technology reporter Mark Gurman with his latest scoop there. More ahead on the Asia trade. This is Bloomberg.
We've already seen a large voter turnout. We're higher than we were in 2020, but I still think there's a lot more to come. There's a lot of interest in this race. A lot of people wait for Election Day anyway, and I'll be interested to see how many more unaffiliated and Democratic members that we can get to the polls.
Governor of North Carolina Roy Cooper there talking about his expectations for voter turnout during the current US election cycle. Let's bring in Amy Dacey, now Executive Director at the American University's Sain Institute of Policy and Politics. She served as an advisor to President Barack Obama and Senator John Kerry, and is also a former CEO of the Democratic National Committee. Amy, thanks so much for joining us. I just want to get this one out of the way right at the start. Are you willing to pick a winner based either on the analysis and the polls or just simply gut feeling?
Going right there. Yes, Paul. Well, listen, it is incredibly close. We've seen that in the polling. We've seen that certainly in the last couple of election cycles. I'm cautiously optimistic that the Harris campaign has done what it needs to do to kind of bring this home in the final hours. But, we've also got races we're looking at in the House and Senate, and a lot of that is kind of remains to be seen.
In terms of the polls, 2016, 2020 both underestimated the scale of Trump's support. Are we perhaps witnessing a three-peat here, or could there be another phenomenon this time? Maybe the shy Harris voter, can we say?
Well, I think there's some things that you have to factor in when you're looking at American politics. We've got 8 million new possible first-time voters in our youth vote between 18 and 29 that have never, voted for, but could be, added to those rolls. We have some states that it's same-day registration, so you can actually go to the polls tomorrow and vote whether you've registered, prior to or not. So there's just some parts of the electorate that we're just not aware of, and it's a very different race, certainly on the mail-in ballots, on the early votes that you saw in 2020. Of course, then we were dealing with a global pandemic, but we also have seen a real influx in some of those numbers in some of these battleground states. So there's a lot that we don't know going into Election Day as well.
How much do you worry about third-party votes or protest votes for people like Jill Stein? Do you think that could be a significant enough factor to impact the overall result?
Yes, I'm glad you asked, because it certainly has made the difference. I think in 2016, you see where Jill Stein's votes got about over 1 million. But when you look at concentrated states about where she was on the ballot, taking away 10,000, 20,000 when you have these slim margins can actually make a difference. Last time in Georgia, we didn't have 30-party candidates on the ticket. We do this time. So that's why it's so important to always look at the election right in front of you. There are some of these states that still have Robert Kennedy as a third-party, person on the ticket, Jill Stein as a person on the ticket. So they could have an influence in these narrow margins. But, I think there's a lot at stake here. So some individuals are really looking to see where their vote counts the most and trying to find a winner here as well.
When we talk about undecided voters at the moment, are you thinking more it's about people that are undecided about whether they are going to vote, as opposed to people who are going to vote but are still, somehow on the policy lines undecided between the two main candidates?
Well, it's interesting because even on the phones, volunteers have noticed that there was some people still this weekend that still hadn't been totally convinced about which way they were going to vote. A lot of this is, there's many things that you're assigned and have to do here tomorrow on Election Day. It's really important to make sure you're making the final case. And certainly, like in a state like Pennsylvania, there was 1.8 million doors knocked on the Democratic side over the weekend to talk to those individuals who they thought might not have made up their minds yet. But also, this is a turnout model. It is making sure those people that have committed to vote are coming to vote for Election Day. Do they have a ride to the poll? Do they have a plan to vote? Do they know where they need to go for their polling location? So that is, to your point, a big part of this is turning out those already committed voters who said that they're going to support your candidacy.
In the past few days, we have seen President Trump, or former President Trump, laying the groundwork in many ways for contesting this should he be unsuccessful. To what degree are you concerned about civil unrest in the wake of the election?
Well, this is nothing new. We've seen every time that he doesn't think that he can win on his policy initiatives, that he can win, on his ground game. Like, this is the narrative that he starts, to build, and it is a concern. But I think the bottom line is there are processes in place to make sure that every vote is counted. I think people are keeping an eagle eye on every state to make sure that there's no challenges. We do this every election cycle to make sure that there's poll watchers, to make sure that there's legal teams ready in case there's anything. I think the real difference here is we really need to see strong leaders, national leaders saying, this is the process. We have to let the process play out. Every vote needs to be counted, not to rush, the counting of these votes, and really step up when it's time to accept, a voting result and make sure that we say the election was legitimate, we're moving forward, and that we'll have a peaceful transfer of power, and that the electoral college system can move forward for the dates that are coming up through December through January.
What do you think the lessons learned will be if it is not a favourable result for Kamala Harris, for the party itself? Because I think one of the biggest concerns is that she simply has not had enough time, right? She's had, around 3 months to be able to communicate her stance on all of these views. And a lot of the, potential voter feedback has been that we don't know enough about her. Do you think an earlier decision, a more cohesive, positioning from the party could have helped with that?
I think things played out the way, they happened to, in real time. I think what has to happen, win or lose, is each party should take a careful analysis of the unique and interesting things that happened during the election cycle that possibly influenced, what was happening during the election. But I think definitely What they have to do is, this is a unique scenario. We don't usually just have 100 days, to kind of move forward with our election. We know our election date far in advance, how this is processing. But I think they did a great job consolidating right away. I think they had the resources to get out their message. But I think the analysis that happens, whether she wins the election or loses the election, has to be about what is on voters' minds, what were the things that they used to connect with them, what worked, what can they bring into the next election in 2026.
Meet Dacey, who's the Executive Director at the Sine Institute of Policy and Politics at American University. Of course, we'll be continuing to discuss all the global implications of the US presidential race with the United States Studies Center as Harris and Trump make their final push in those key swing states.
All right, we talk a lot about the Trump trade. Let's take a look at some other assets that are moving ahead of the election. Emerging market currencies rising on Monday as traders recalibrate bets on what might happen. The South African rand is often seen as a proxy for EM risk appetite. That's been up almost 1%. And the index for emerging currencies more broadly up a third of 1%. Those currencies from Latin America and Eastern Europe in particular rallying against the dollar one day before the election. Although, to be fair, the US dollar's been weakening against pretty much everything. Well, author and investigative journalist Bob Woodward says Donald Trump is a danger to the US. He spoke to Bloomberg about tomorrow's election and the political reputation of each presidential candidate.
Trump is making very clear who he is, and it's so visible. Let me just give you an example. I'm sorry, this may sound a little boring, but it's right at the heart of your question. The people Trump, when he was president, chose to be close to him, people who'd spent their lives defending our country. And let's look at what these people that Trump picked for key positions say about Trump now. Former Chief of Staff John Kelly, one of the most respected people in the military. This was Trump's selection to be the Chief of Staff at the White House. Kelly says of Trump, he's an idiot. It's pointless to try to convince him of anything. He's gone off the rails. We're in crazy town.
Bob, let me ask also, to your wonderful quote, what are the bastards hiding? What is Vice President Harris hiding into this election?
Well, I think there are actually things that we don't know enough about. I had some time to work on how she deals with lots of issues, and it's very, let me get the right selection here, because she is tough. She is the person who goes and has meeting with Netanyahu, which I got the notes of, and really this was July 25th of this year, just a couple of months ago, and she could not be tougher with Netanyahu. And the notes show her saying the following in a closed meeting with Bibi Netanyahu: I'm disturbed by the humanitarian situation in Gaza. People are starving. There are 4,000 people per toilet. She really gets on him about this. And then she goes out in public and doesn't pull any punches.
The author and journalist Bob Woodward there speaking to our colleague Tom Keem. Subscribers can also tune to Bloomberg for more on this. You can get more at TLI Vigo to get commentary and analysis from our team of expert editors. More ahead on the Asia Trade. This is Bloomberg.
Tokyo Stock Exchange is extending trading hours starting today. That's going to push back the cash market's close to 3:30 p.m. in Japan. Bloomberg senior Asia stock reporter Hideyuki Sano joins us now with more. So, Hideyuki, tell us why is this happening? Why extend the trading hours?
Good morning, Paul. So the reason the Tokyo Stock Exchange gives officially is to make the exchange resilient, and what they're talking about is to make it stronger against potential system crash, because about 4 years ago the TSE had a major system crash and they had to hold trading for one full day, and they don't want to repeat that again. So by extending trading hour a little bit, they hope that they can avoid that sort of things. Of course, some market players are skeptical about what the TSE is saying. I mean, and probably one hidden reason is basically there's been criticism on Japan's short trading hours, so the TSE always wanted to make it longer. So that's also another reason.
Do you see a meaningful impact when it comes to the market?
Yes. Well, the Tokyo Stock Exchange hopes that the longer trading hours will lead to a higher trading volume, but there's also a little bit of skepticism on that as well. And if you look up the examples of other trading centers, like for instance, South Korea extended trading hours in 2016, but there was no visible impact on trading volume. And Japan also lengthened the trading hours by reducing midday recess, but again, that didn't do anything to trading volume. So in terms of trading volume, it's hard to say there will be any meaningful impact, but some investors are a little bit worried about liquidity, because if you have longer trading hours and the same trading volume, basically you're spreading out the same trading volume over longer hours. So that is one concern many investors have at the moment.
Bloomberg senior Asia stock reporter Hideyuki Sano there. Taking a look at what we're watching when it comes to energy markets, we are seeing oil continuing to put on some gains there. Brent crude over the last 2 days up by close to 3%. They're steadying really with these Middle East tensions continuing to weigh, the US election in focus, as well as OPEC Plus's decision to delay adding more barrels to market.
This is the Asia trade. We're counting down to Asia's major market opens, and Haidi, fair to say, a bit of nervousness about as we count down to the US election. This time tomorrow, we're going to have some idea of who the next US president will be, or maybe not. We're going to be somewhere new anyway.
Yes, at least the eastern states are right about this time, here in Sydney time, that is, we'll start having a better idea. And you know, we are really so split in terms of where the victory is going to go, how long potentially the definitive result will start to look a little bit more firm, and also what the makeup is going to look like when it comes to the House and the Senate too. Yeah, so many unknowns and so much unpicking of it going on. But for anyone craving reassuring certainty, we do have an RBA decision today, and they're going to be on hold for looks like well, a year, 4.35%. But we've just got the open now in Korea and Japan. Japan, of course, coming back after that public holiday yesterday, an immediate rebound there, a bit of catch-up trade going on, better by about 0.5% at the moment. As we were discussing a moment ago, we've also got a lengthened trading day on the Tokyo Stock Exchange. Starting from today, the close is going to be 30 minutes later at 3:30 p.m. local. We've got a stronger yen as well, relatively speaking, 152.27, although the US dollar has been softer against most of its G10 peers. Taking a look at South Korea, meanwhile, the Kospi also opening a little bit of softness there, off by about 0.75%. We did get CPI numbers out of Korea a little bit earlier on, flat in October, 1.3% CPI accelerated on year. That was a lot slower than expected. So
perhaps a bit of certainty that the next move from the BOK is likely to be down. The won 1,374 against the greenback. Haidi.
Let's get back to our top story. Donald Trump and Kamala Harris are sweeping across the swing state of Pennsylvania on what is the final day of campaigning for a presidential election that's on track to be one of the closest ever. Let's bring up Bloomberg News senior editor Michael Shepard, who joins us from Washington. And Michael, unsurprisingly, we see both candidates spending, the final hours of this campaign focusing on these key battleground states.
Yeah, this is really the path to victory for Mr. Trump or Vice President Harris. And really, it depends on how many of these voters they can turn out in the final hours before people head to the polls in person tomorrow. Remember that there's already been a lot of early voting performed by voters in the preceding weeks. As many as 80 million Americans have already cast early ballots, either by mail or in person. So they are scrapping for a fairly small portion of the electorate that might still be undecided. So we're seeing the former president holding events, as you mentioned, in Pennsylvania. He had 2 today, one in Pittsburgh and then another in Reading. And he'll be closing the evening, per his own tradition, in Grand Rapids, Michigan. That's where he's delivered his final message during his previous 2 presidential bids. And for the vice president, she spent the entire day in Pennsylvania. It's not called the Keystone State for nothing, and they really see it as critical to maintaining this Democratic blue wall of northern industrial states that have helped deliver victory in the past, including for Joe Biden 4 years ago. She'll be wrapping things up with an event in Philadelphia very late tonight, headlined by none other than Lady Gaga. And they will be doing it, if you're a movie buff, at the Philadelphia Museum of Art, where Rocky was filmed.
Michael, also we're seeing in the past few days Donald Trump really attempting to cast doubt on the result before the result is even in. What's some of the commentary around this, particularly in terms of the risk of civil unrest after tomorrow?
Well, there is increasing concern that former President Trump may be seeking to cast doubt on the results ahead of time, as you said, so that he can mount a challenge, that he can undermine the validity of the results simply by saying so. And we saw him do this in 2020, and it actually had a corollary effect with protests that erupted outside some counting places, including in Arizona. And then later, the January 6, 2021 assault on the U.S. Capitol, as lawmakers were preparing to certify the results of the election. So this is a concern for the Harris campaign. Look, they are saying that no matter what the former president says about the outcome, we're going to hold firm and stick to our guns. But local officials are paying very close attention to what Donald Trump is saying and whether or not he is agitating his supporters to go out and do something rash. We are seeing, even in Washington, storefronts are being boarded up in certain places in anticipation that there could be some trouble. So this is something we are watching for. We are also on the lookout for any possible disinformation being spread on social media platforms and elsewhere regarding the outcome.
When we talk about undecided voters, on the eve of the election, are we really, are the candidates at this point appealing to those undecided on policy or those that are still deciding whether they'll actually turn up to vote?
A lot of it is just voter enthusiasm at this point, because the survey that we did, Bloomberg News Morning Consult, our last poll of swing state voters, hit almost 5,000 respondents. And out of those, only 93 said they had not made up their minds. Now, the question is, are people motivated enough to vote? The former president is really trying to stoke his voters with the familiar message of grievance and his sense of injustice that he tries to share with his followers and supporters. The vice president, on the other hand, is trying to strike a different tone in the last day of campaigning. She is not mentioning her opponent really at all, and instead focusing on her messages about the economy and also about reproductive freedoms, which has turned out to be an important message to send to female voters, and they are hoping that will turn out an advantage in their favor.
Bloomberg News senior editor Michael Shepard there. Let's get the market view now with Luke Browne, who's the head of Asia Asset Allocation at Manulife Investment Management. Luke, great to have you with us. And we've seen the real kind of retrenchment of the pretty confident Trump trades, right? Particularly pertaining to the dollar and the crypto trade. How would you be positioning at the moment, given it does seem like we're headed to that photo finish?
Good morning, Heidi. Thank you for having me, first of all. Look, I think Paul hit the nail on the head in his introduction, that there's just a huge amount of uncertainty. The election results really are on a knife edge, and then the question does become, do we expect to see a result straight away? We don't know yet. I would hope that we do, but we do need to be conscious that the markets are nervous. So how do we think about positioning? Well, certainly from a Manulife point of view, we've taken a much more cautious stance. The market has obviously reacted quite violently in both directions, depending on the sort of views of the pollsters over whether we might have a Trump administration or whether or not Vice President Harris is going to stay and become president. So I think from our point of view, it's certainly been one of consolidating positions, taking down overweights into risk assets and closing out parts of the market that we feel will be more volatile. And I think if we look at interest rates in particular in the US, that's been a place where it's been quite difficult to position whilst we're waiting for these unknowns to become certainties.
In terms of being able to hedge some of that risk, I suppose there's an overriding question that asks whether it matters, right? Because we know that equities tend to see a nice bounce kind of post-election regardless of who wins, and the outlook certainly until the end of the year is for further gains in US stocks. So do you then start looking ahead to how we plan out 2025, given the outlook there for risk assets is a whole lot less clear?
Yeah, most certainly. And look, I think the exercise here as asset allocators is to look at how markets are being priced, map that against what our outlook is for those markets over both the short and the medium term, and then to start taking positions where market pricing makes sense. So once we get through the volatility of the election, and it is, for me, more about managing the market volatility than specific exposures, we can start to, I think, reposition ourselves for where we think the medium-term outlook is going to be. Now, within that, one of the sort of core positions that I do think is going to resonate in portfolios is probably a steepening trade in US dollar rates. And part of that is because, irrespective of the administration, I do expect the term premium to increase as a reflection of likely greater spending and where the funding for that spending may or may not come from.
Luca, you at all concerned about inflation making a comeback in the US in 2025, and how does this cloud the path for the Fed?
Yes, most certainly. And it's interesting for me, normally in a Fed week, that's where the focus is going to be. But of course, we get through the election, then we have the Fed. I think most likely they're going to stick with a quarter-point cut at this meeting. But if I look at the path of disinflation globally, and if I look at the potential change in administration, if I look at what is happening elsewhere in the world, and I'm sure we'll talk about stimulus in China, one of the risks that I would identify as being on our radar is reflation. Now, what might that mean for the path of interest rates? And, you talked about Australia today keeping rates at highs. The ECB obviously is cutting more aggressively. They have different problems. So that question of whether we could see, I don't think we're going to get to the levels of inflation we saw previously, but certainly the path of disinflation could become weaker, and you might start to see underlying catalysts of reflation into the global market, depending on administrations and depending on policies, what impact any tariffs might have, etc. So there is a lot to unpick there.
Luca, just want to get to the question of the day today on Bloomberg, which is how much will the S&P 500 climb by the weekend? Good luck with that.
It's going to be up, the same, or down. Sorry for the flippant response, but I don't have a strong view on what might happen over the weekend. I do expect that you will get a degree of positive outcome simply on the basis of removing uncertainty. Now, that is, of course, predicated on the point that you made, that normally we would expect the election result to come out and we move forwards. There might be challenges, it might be a more delayed outcome, and that could precipitate a less favourable result on the S&P. But notwithstanding that, and with the Fed coming out and then potential action from China coming towards the end of the week, those could all be positive catalysts for equity markets.
All right, Luke Browne, head of Asia Asset Allocation at Manulife Investments, going to be staying with us. We'll return to a few other themes in a moment, but just want to check in on one of the big movers in Japan. We've got Nomura better by almost 5% right now. Nomura's profit rising more than expected last quarter thanks to strong results in wealth management, trading and investment banking. Net income almost doubling to a little over 98.4 billion yen. So that beat analyst estimates, and Nomura rising pretty strongly in Japan today. The index more broadly better by about 0.5%. We've got more ahead on the Asia trade. This is Bloomberg.
China's top legislative body has been reviewing a proposal to ease the financial burden on local governments as investors watch this week's meeting for signs of new stimulus. Let's bring our China correspondent, Min Lo, who joins us in Hong Kong. So, Min, the sort of murkiness when it comes to local government debt has been an ongoing concern.
Yeah, it is. And this raising of the debt ceiling to tackle local government debt, it's expected to be the biggest component in the economic stimulus package that we're expecting by the end of this week. And it was somewhat foreshadowed by the Chinese Finance Minister Lan, who said that they will be taking forceful measures to tackle this. And Bloomberg previously reported that there could be maybe 6 trillion yuan in local government special bonds spread out over 3 years to tackle this. And as you can see on the screen, this comes at a time when government spending has been lagging behind year to date so far. It's down 1% when it should be up 3%. And while this is not strictly a fiscal expansion per se, because local governments will be issuing bonds to refinance their own off-balance sheet debt, but it will still alleviate some of their debt servicing burden and it will allow them to use the additional cash flow to pay back the unpaid money owed to suppliers and employees, for example, that by some estimates amount to about 10% of GDP. And of course, we're still waiting for more signals about whether there will be more consumption side stimulus, which as of now is still missing from the readout that we got from Xinhua yesterday.
How are markets responding to expectations of the policy moves we've seen so far?
Yeah, I think it's interesting if you look at market close yesterday on the Chinese markets, we're seeing a big rally, but that was, of course, before the Xinhua readout. But we continue to see this momentum overnight in the U.S. session as well. If you look at the KWEB, the Golden Dragon, and the U.S. ETF tracking the Chinese stocks, those are all still in the green overnight. And this is coming amid a U.S. pullback. So we're seeing this decoupling here of the Chinese stocks and the U.S. stocks, which suggests that those moves there are really driven by the policy expectations rather than any U.S. election factors. And also we're seeing that Citi's economic surprise gauge is turning positive. That's on the back of the green shoots that we have seen recently with the PMI data as well as the housing data in early October. And so these would be quite positive for sentiment as well. But of course, the question is how sustainable these gains that we're seeing would be, because it all really depends on the implementation as well of those measures that will be announced.
All right, Bloomberg's China correspondent Min Lo there. Still with us is Luke Browne, head of Asia Asset Allocation at Manulife Investment Management. Luke, we've got a few competing narratives really when it comes to China, a potential tougher trade picture ahead, but also, on the other hand, stimulus details still to come. What's your approach to China at the moment?
Well, I think, first of all, we need to look at what's happened over the past few months. And I think it's quite telling that Chinese equities were the best performing equity market over the third quarter. Now, what's the reason for that? Clearly, sentiment was at lows, huge concerns over the ability of China to reinvigorate the markets. And we saw what I might describe as a sort of perpetual drip feeding of stimulus, both monetary and fiscal. Now, this came as no surprise to us at Manulife. Carefully analysing what was happening, the messages that have been given by the Chinese authorities, and also leveraging our onshore firm, Manulife Fund Management. And I think the path that's been taken is entirely consistent with those messages, which is reintroduce stability, give confidence to global investors, but at the same time try and avoid asset price bubbles. Now, where do we find ourselves now? Obviously, we're waiting for the results of the discussions taking place at the moment, with details due on Friday. It seems entirely appropriate to me that for the Chinese to wait until they see the results of the US elections and then moderate what you might think about as the bottom up, which is sort of greasing the cogs of the internal Chinese economy through the debt swaps that we're talking about, etc. But then also the top down, what might be the global implications for the different administrations that we could have in the US, and the potential need perhaps for more aggressive stimulus, probably on the fiscal side, depending on the outcome of those elections. So there is a lot to digest, but I think on the whole, we've certainly seen positive moves, but there is more to be done.
What would you need to see to persuade you to increase your China allocation?
Well, I think the size of the stimulus measures is going to be one of the key things, but fundamentally what you're looking to do is unpick some of these roadblocks in the Chinese economy. The property sector remains a particular challenge, but as you're just talking about, it is also, you know, the sort of local governments, their ability to manage their own books and have the ability to release capital to stimulate the various parts of the economy. And that, for me, is the bottom-up process. That is looking at the consumer. It is giving confidence on the path of the Chinese economy, and then ultimately encouraging the return of FDI into the Chinese economy. So those are the pieces that we're looking for. So at the moment, whilst I have a medium-term constructive stance, it is very much a function of the expectation of what we believe the Chinese authorities are going to do in terms of stimulus.
We've seen some outflows from some of these prior market darlings, Japan, India, in favour of that, you know, exuberance of the China rebound. Would you be looking more still constructive at those markets?
Well, here I think, you know, we need to look at our timeframes for investments. I think Japan obviously has been a very strong performer and is one that we have had both a strategic and tactical overweight to at different points over the year. I think the long-term message is still encouraging, but we're now going through a period of more political uncertainty and obviously trying to understand what the BOJ might do in terms of the next move in rates. That has perhaps come off a little bit and has been delayed, but I think fundamentally a normalisation in rates in Japan is likely to be constructive. India, again, has been an overweight position in portfolios. We have moderated of late, as you say, watching the flows, people taking profit and perhaps moving on to more attractive short-term opportunities, but I think the secular story remains. Now, what I'd be watching there is certainly the path of crude oil. We've seen the decision from OPEC. We have Middle East tensions and Iran at the moment sort of posturing over what their response to Israel might be. So we do need to be cautious over India and its sort of attachment to the price of oil. But again, as I say, it is a long-term secular growth story and one that we certainly believe in.
All right, Luke Browne, Head of Asia Asset Allocation at Manulife for Investment Management. Thanks so much for joining us. Our subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about, and you can become part of the conversation as well by sending us instant messages. You can check that out at TV Go. And we'd like to hear from all of our viewers. So we've put together a short online survey. You see on the screen there is a QR code. You can scan that and then tell us what you'd like to see more of on Bloomberg Television and any other suggestions for improvement. We have more ahead on the Age of Trade. This is Bloomberg.
This is the Age of Trade, the latest geopolitical stories that we're following. Israeli officials say they're seeing an unprecedented number of Israelis spying for Iran. Since July, their counterintelligence service has indicted 23 suspected spies for helping Tehran locate targets for potential attacks. They were allegedly recruited through social media and offered thousands of dollars in payment. The Israeli government says it's taking the threat seriously. European and US intelligence officials believe Russia is behind a plan to place incendiary devices on cargo planes found for North America. 4 people have been arrested, and German security services think a parcel that caught fire at an airport in July was probably planted by Russia. The officials tell Bloomberg that they're taking the alleged plot seriously and expect Moscow to attempt similar acts in the future. Ukraine says it's engaged with North Korean troops in Russia's Kursk region for the first time. Reports suggest Pyongyang has dispatched about 10,000 troops to Russia, a deployment seen by Western leaders as an escalation of the war. Moscow has been pushing hard to dislodge Ukrainian forces from Kursk after Kyiv's surprise incursion in August.
Let's take a look at oil prices. We did, of course, see some gains after OPEC Plus delayed a production increase. We also had Iran threatening to respond to Israel's recent actions. So we did see prices rise yesterday, although now we've got WTI giving up some of those gains. New York crude 71.42 at the moment. Of course, a lot of uncertainty around other events, not the least of which the US election. We'll have some clarity on that, or not, within about 24 hours' time. We, of course, have a Fed rate decision coming up as well. So crude prices just giving up some of those gains that we saw yesterday. Heidi.
Yeah, take a look at how the euro is positioning, and of course that slippage that we see in the US dollar as one of the sort of pro-Trump trades continues to play out there, and the euro kind of turning a little bit more bullish in this respect. But honestly, we are expecting quite a bit of volatility. That euro-dollar pair keeps setting higher highs over the past couple of sessions, but they are bracing for that near 2% swing this week. Now, European stocks retreating, and we're seeing the future session looking like we'll see another repeat of the risk aversion in the previous session as well. Losses, though, have been kept in check by banking and energy, so watching out for those sectors. We are looking at live pictures there of Singapore as the Asia trading day really begins across what is really expected to be a pretty difficult few days for risk appetite. We are getting, though, some data, Singapore as well as Hong Kong October PMIs. They're just crossing the Bloomberg. This is a picture as we see the Singapore October whole economy PMI weakening to 55.5 versus 56.6 in the prior reading. The Hong Kong reading coming in at 52.2, so that is actually a marked improvement from the 50, which was just above that threshold, just at that threshold, I should say, before it fell into contraction. So quite interesting, because we have also seen that improvement when it comes to China PMI, so perhaps a little bit more of a correlation when it comes to the Hong Kong economy is what we're seeing there. At the same time, we're seeing that China Economic Surprise Index has turned positive as well, ahead of another China PMI print later today with that Asian services number. We're looking out for that to see whether that sort of Singapore, that sort of, I should say, stimulus element has come into play there. That Hong Kong PMI number seeing a little bit of an improvement from the prior month, Paul.
Let's take a look at how we're tracking on those markets in Asia that are open at the moment. Bit of a mixed bag, really. We've got Japan a bit stronger, 0.6% higher on the Nikkei at the moment. Nomura having a good day after a profit beat for the bank. The Kospi, meanwhile, a bit softer, off about 0.2%. South Korean CPI data that came in earlier was a bit softer than expected as well. So looks like there might be a bit more easing in store from the Bank of Korea going forward. And in terms of central banks, it is decision day for the Reserve Bank of Australia today, although we're expecting them to stay on hold, and that will mark 1 year of rates being parked at 4.35%. A little bit of softness there on the local index. Suffice to say, markets really working out what's going to happen in the US tomorrow. JP Morgan's been weighing in on the potential direction of the US dollar. Here's some scenarios for you. In the event of a GOP sweep, well, that would be broadly positive for the greenback. Trump split with split Congress, well, that would be stronger for the dollar versus EM China. Kamala Harris with a split Congress or a Democratic sweep, potentially broadly weaker for the dollar. And And there are perhaps some other scenarios there that aren't on the board. Anyway, let's move on. The US Democratic presidential candidate Kamala Harris and her Republican rival Donald Trump making their final campaign push in the swing state of Pennsylvania, and the outcome of the election is going to have a major impact globally, from Ukraine to world trade. So for more on the big take today, let's bring in news desk editor Jill Dacey. Jill, when I look at this sort of scenario, I do wonder if the few thousand people in a few counties in Pennsylvania really fully understand what's at stake here in terms of the war in Ukraine. Even Chinese policymakers sitting on their hands waiting for what that handful of voters decide. What's at stake here globally?
Well, tell you, Paul, I think those voters in Pennsylvania are very well used to, being a part of this key battleground state here. I know several people there who have had their doors knocked on for weeks at this point. I mean, yes, I think that, when you take things in context here, looking at the fact that this really comes down to probably a matter of a few thousand, tens of thousands of votes in just a handful of states here, it is really, kind of enormous what is ultimately at stake. What we did with our today's big take is take a look at, a broad range of sweeping issues across the world, the war in Ukraine, as you mentioned, how these two candidates ultimately have a different approach to foreign policy here. Now, if you just look at that issue in particular, Kamala Harris has indicated that, she'd continue to push for funding in Ukraine as that war has dragged on. We're now, several years into this conflict. It's become more difficult for the Biden administration, and likely would still continue to be difficult for Kamala Harris to continue advocating and successfully advocating for more funding for that war. Donald Trump, on the other hand, has pledged that, he would end the war within 24 hours of essentially being elected. Of course, he and his running mate, J.D. Vance, have indicated that would likely come with some concessions from Ukraine. So really, I mean, you're just looking at that as an example of one issue where you've got two different candidates who would take, pretty different approaches to foreign policy. Now, you add in everything else that we're looking out for, from, as you mentioned, tariffs. I mean, Donald Trump obviously has positioned himself as marquee positions as being more protectionist. I mean, he did launch a trade war with China when he was last in office. He's pledged tariffs of upward of 60%. Harris, on the other hand, has pledged to keep in place some of those Trump-era tariffs that the Biden administration has really focused on, but obviously hasn't done anything or said anything as dramatic as that 60% tariff that Donald Trump has said. I think the big takeaway here is that no matter what happens, again, you are looking at two candidates who draw some different lines in the sand when it comes to foreign policy. And so likely you would look at a very, different United States depending on who ultimately is elected here.
And that's before we even sort of get to the trade pickle, right? Not just tariffs, but perhaps, over the top of that is this ongoing tech bifurcation. Does that, in a sense, really differ from what we're already seeing from the Biden administration?
Well, look, I think that, to a certain extent, when it comes to tech and when it comes to China in particular, I mean, this is one area where there's actually fairly, broad bipartisan support in the United States among Republicans and Democrats in terms of limiting China's access to advanced tech. This is, again, just one area where you actually do find some crossover on both sides of the aisle. Now, how much that actually, sort of looks, I mean, we were just talking here about, the way that actually manifests under a Harris administration versus a Trump administration. But again, ultimately, I mean, when Joe Biden took office in 2021, he didn't roll back, a lot of the tariffs that Trump had implemented, and actually did go significantly hard on trying to curtail a lot of China's advancements in semiconductors and other forms of advanced technology. So you have to think that the direction of travel in the United States generally is trying to, sort of limit China's rise in that in that arena, and in many ways as it possibly can. China obviously is incredibly, sort of attuned to this and has been working for the last several years to try to buffet itself against a lot of these, sort of tactics that the United States has really taken on here.
Our news desk editor Jill Dacey there with that global view on the implications of the US election result. Subscribers can read that full story on today's Big Take. You can turn to your terminal or head over to Bloomberg.com.
Coming up next, the United States Studies Centre joins us to discuss the future of Australia's defence policy and alliances in the face of a possible Trump presidency. This is Bloomberg.
Australia's central bank is poised to keep interest rates at a 13-year high today, marking a year of unchanged policy. It comes as it grapples with a slow pace of disinflation and mounting global risks capped by a tight US election race. That's bringing our economy reporter, Swati Pandey, there. And the RBA is set to remain that outlier when it comes to its peers already well and truly embarking on easing.
That's absolutely right. We have seen other central banks starting to ease, from US Federal Reserve to Reserve Bank of New Zealand, Bank of England. The Reserve Bank of Australia does not seem ready yet. One reason is that our inflation is coming down at a slower pace than other countries, and that's also because we did not go as high as other countries did. There's also a little bit of mismatch with fiscal policy, which is very strong. Fitch Ratings said this week that general government deficit is going to be 2.6% of GDP, and the median for AAA rated economies is 0.6. That just goes to show how much governments are spending around Australia, which is keeping prices elevated.
In terms of prices, I mean, they were broadly in line last week with expectations. So in the absence of a change to the headline decision, I imagine you're going to be digging through the statement today. What would you be looking for?
One of the key things that everyone is looking for is whether they change their language in that very last paragraph, which is kind of like a guidance language. They have been saying they are not ruling anything in or out. Do they keep that line? Do they change that? There has been kind of like an implicit hawkish language around the need for monetary policy to remain restrictive, that they are vigilant to upside risks to inflation. Whether all of that language is softened or whether they continue to jawbone markets, that will be, and then press conference will be really closely watched. Michelle Bullock has been really clear in her communication since she started doing press conferences at the start of this year. So that is something that markets, economists, everybody really keenly watch as well.
Other than inflation, which is obviously front and centre, what else would the RBA be looking at in terms of what the threshold would be to begin cutting?
Look, right now we are in this global uncertain environment, and recently the RBA did mention that geopolitical uncertainties are more pronounced. That's the exact words that they used. It's very likely that they will keep that language intact, given that since their meeting in September, things have actually worsened. So North Korea has joined the war with Russia against Ukraine. Israel and Iran are striking at each other, and then U.S. election is a big one, right? And we will find out. We won't find out the results probably in the next few days. Even there is uncertainty about China's economy. So the RBA really has to look at all of these aspects as well. And then in Australia, we will also get into election mode soon for elections in May 2025. So probably more government spending as well. So there's a lot for the RBA to digest here.
All right, Bloomberg's economy reporter Swati Pandey there ahead of the RBA decision in a few hours' time. We've got some live pictures here of one of President Trump's final rallies. It's not the last one of the election campaign, but there he is in Pittsburgh, Pennsylvania. He'll be delivering what his aides are describing as his closing message to the American people. He's expected to focus on issues that can win him this election bid, including inflation, immigration, crime as well. This event's also going to feature a few other high-profile speakers also, like Secretary of State Mike Pompeo, the former Secretary of State Megyn Kelly there as well. So there he is on the stage in Pittsburgh, Pennsylvania. Well, a potential Trump presidency has raised concerns about the future of Australia's defence sector. Under the 2021 AUKUS agreement, the US will sell Australia a fleet of Virginia-class submarines, the first of which is expected to arrive early next decade. With us now is Peter Dean, Professor and Director of the Foreign Policy and Defence Program at the US Studies Centre. So, Peter, that's the expectation that Australia gets a Virginia-class sub next decade. Should Trump get to the White House, is it actually going to happen?
Look, nobody knows, I have to say. Donald Trump's approach to foreign policy is a little bit undefined. We know he's a little bit unpredictable. And my assessment is that former President Trump actually doesn't know what AUKUS is at the moment. He did have an interview with Nigel Farage a little while ago where he was asked a question, and it was clear he pivoted then to our current ambassador, a question about our current ambassador, Kevin Rudd, because it was really clear that he didn't know about that. But I think if you look more broadly at the Republican Party, particularly those who are supporting President Trump, who could potentially go into another Trump administration, like his former National Security Advisor, Robert O'Brien, or some of the leading congressmen, senators who are very strongly supporting President Trump, there is a very strong support amongst that group for AUKUS. The AUKUS caucus, as it's known, so the congressional members in the House and in the Senate in the United States, largely backed by strong numbers of Republicans who are very strongly supportive of AUKUS. And in terms of, you look at the detail, when it comes to President Trump, whoever's the next president of the United States will not be the president who signs off on the sale of those Virginia-class submarines to Australia. In fact, it will be the president thereafter. So if Trump does win, he won't be the president making that decision. The only way President Trump could be that president is if he loses tomorrow in the election, runs in 4 years' time when he's older than Joe Biden, and wins that election thereafter. So there's a bit of complex detail in the policy and structures here. But of course, what Donald Trump could do is, if he doesn't like the deal, is try and renegotiate the deal, or in fact, try and tear up the deal if he really dislikes it.
Well, let's just set AUKUS to one side, because I know that there is another Australian defence policy that you consider more important, although it doesn't really get the limelight. That's the Guided Weapons and Explosive Ordnance Plan. To what degree does Australia rely on the US for that, and is that also safe under a potential Trump presidency?
Well, that's a particularly important program that the Australian government has set up. And last week, Minister Pat Conroy announced the government's Guided Weapons and Explosive Ordnance Plan that lays out a framework for Australia to develop a domestic munitions manufacturing capability in high-end, long-range weapons. So starting with things like GMLRS rockets, which are shorter-range US Army rockets, also Kongsberg anti-ship missiles, but also it will basically, and artillery rounds, but it will also push into eventually into much longer range missiles. And of course, Australia is very dependent upon technology transfer from the United States for this. AUKUS has been an incredible help. So the reforms to AUKUS legislation in all three countries has allowed the transfer of technology to happen more smoothly. But of course, the Missile Technology Control Regime, the MTCR in the United States, has still got to limit that. There still needs to be a lot of support and buy-in from US industry and the US government. So how the Trump administration would or would not progress this particular agenda will be top of mind for the Australian government. Pretty much this missile production and getting into long-range strike, it really sits at the heart of Australian defence policy at the moment. And as I mentioned last week in a piece that I wrote, that I think it's just as important, if not more important, than the AUKUS deal to ensure that we achieve the ability to do deterrence, to contribute to the regional balance of power, and also to protect Australian sovereignty.
Is that recognition of the importance of industrial partnerships likely to change under either election result?
Well, if you look back at the former Trump administration, a lot of the things that we're seeing now rolled out in the Pentagon by the Biden administration had their initial start back in the last year or so of the Trump administration. So I'm somewhat confident that a lot of these things, such as the combined industrial collaboration, are going to be areas that work in a continuing Trump administration. Things like this particular program in Australia is seen as a complement to US domestic weapons production, which we've seen come under enormous strain with the war in Ukraine, and also an attempt to build up their own weapon stocks to provide their own deterrence against countries like China and Iran and Russia. So, as I said, this is a complement. We know, for instance, Australia wants to get into solid rocket motor production. That's a key part of the government's plan, and we know that the United States, one of the key supply chain blockages to expand their own production of missiles is in the solid rocket motor production area. So the Australian government has very much pitched this as a partnership with the United States, something that would not only enhance Australian defence policy and strategy, but also significantly support the United States in their own ambitions. And of course, the Trump administration will be looking at basically what's in this for the United States, as the Biden administration says, and there's a lot of complementarity here. So I would see that a lot of support, and in fact, there could well be additional support in the Trump administration. Republicans have been quite critical of the MTCR, which is one of the key blockages to stop this program from rapidly accelerating. And some of those former Trump officials and current Republican congressmen and women have been looking to reform that organisation and been more aggressive in that space than the Democratic administration under Joe Biden has been.
How much do you worry that Australia, as this, middle nation, again gets in the middle between this increasingly tense relationship between its biggest trading partner and its most important strategic partner?
Well, look, I think if you look around the region, one of the key factors is that we're pretty much all in the same position. The United States is the number one trading partner is China. The same is if you look at Korea and Japan, Australia. So this is about balancing the economic partnership with China against the security partnership. So we look at countries like Japan, Korea, the Philippines, Australia, India, and the United States that are all looking to progress the policy of a free and open Indo-Pacific, resisting Chinese military coercion in the region and Chinese expansionism, while balancing that out because we have a mutually interdependent trade relationship with China. Now, that also puts China in exactly the same position. They need to maintain a careful relationship with all those key states in the region as they continue to trade with them, while also attempting to achieve their own foreign policy objectives, which are very much, as we've seen in the recent years, butting up against that kind of free and open Indo-Pacific idea as they push in key areas in the South China Sea, St. Thomas Shoal around Taiwan and in the East China Sea as well.
Right. Peter, really great to have you with us. Peter Dean, who's a professor at the US Studies Centre. We do have more on Australia Ahead every Tuesday at 11:40 a.m. if you're watching here in Sydney. That's 8:40 a.m. if you're tuning in from Hong Kong.
Plus, tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify, or Bloomberg.com. More ahead on the Age of Trade. This is Bloomberg. $33,000 striking Boeing workers are voting on whether to accept the plane maker's latest offer or extend their stoppage. The latest proposal would boost wages by 38% over 4 years and give workers a $12,000 signing bonus if ratified. Let's bring in our transport reporter, Danny Lee. Danny, how likely is this deal to satisfy those union members? How likely is it to get accepted?
Well, the union workers are now voting on whether to accept or reject. It's a simple, two-answer proposal here. And so we'll know in a couple of hours from now when voting closes which way the union members will have voted. When you just see Boeing's share price over the last couple of days, it has risen on the back of the optimism that this vote will go past. And so the idea that this vote doesn't pass, given how narrow it was defeated last time, it would probably be unthinkable. And given we are heading into US elections, so there'll be a lot of distractions, and whether anyone will be able to get Boeing and the unions down round the table again would be clearly very challenging. So we are expecting this to be passed.
What are we expecting to be the sticking points? And I guess once this is over and done with, how quickly can Boeing get on top of the myriad challenges that have built up during this period?
I mean, the key sticking points really still resolve around things such as pensions, but given the pay increase that is on offer, I think most union members, given we are into the 8th week of strikes, are willing to overlook that. But, we will see the workers pretty much immediately go back to work, or even as early as Wednesday morning in the US. But then for Boeing, it can then focus on the really bigger strategic issues of how to downsize the business, what businesses and units to focus on. And so that's critical for new CEO Kelly Ottberg. And given this, the financial hit it has taken and the risk of that ratings downgrade, this is very much important for Boeing to try and move forward.
Bloomberg's transport reporter Danny Lee there in Hong Kong. We'll take a look at what we're watching when it comes to futures trading for both the US and across Greater China as they head towards the open of trading in Taipei, in Shanghai and Shenzhen, and in Hong Kong as well. TAIEX futures looking pretty positive. We're seeing a muted session when it comes to US stock futures, so really investors just treading water as we head towards the US election.